It's the first week of October, and this week was a great reminder that interest rates don't move in a straight line. Even when they're expected to drop over time, things like economic data or events can cause them to rise temporarily before continuing back down, which is exactly what we saw happen this week. We closed the week out with rates hovering between 6 and 6.5%, whereas last week they were slightly lower. So this week, a mix of Fed comments and strong job reports slowed things down for us a bit. If job data continues strong, the rate of future cuts will be slower. So that's why it's so important for buyers to seek expert advice on interest rates. There's always more to it than what you read online. Buyers who have not locked their rate and have less than 2 weeks to close may not have time for rates to come back down to recent lows. So definitely consult your lender. What about home prices? CoreLogic reported that home prices declined slightly by 0.1% in August. I would say typical for seasonality, with year-over-year growth at 3.9%. Now that's great news, which means we are seeing some appreciation. Homes are gaining value. So CoreLogic does forecast a slight rise in September. We'll see when those reports come out in a couple weeks, and 2.3% growth over the next 12 months. I'd say that's pretty healthy. What about the rental market? So rents declined by about 0.5% in September and are down almost 1% year over year. We are definitely feeling this in the Austin market. A lot of rental inventory is out there right now. We've seen more inventory and rentals than we've seen in a long time because a lot of folks who could not sell their homes in a timely manner and needed to get their mortgage covered decided to lease them out instead. So that's driven the rental prices down, and we've seen it taking longer to find a tenant, and many of our landlords have had to drop their rents lower than in previous years. Let's get back to what the Fed had to say. So Powell expressed confidence in the strength of the economy and the labor market and suggested that 50 basis points of additional rate cuts are planned by the end of the year. Let's cross our fingers that we do see some more rate cuts. I will say a few weeks ago with the announcement mid-September of that half a basis point, we're seeing a lot more buyers out looking and some more contracts going pending. So I think that for the rest of the year, given the election, we're probably going to be in the state that we're in now. Economists that I've been listening to are anticipating 2025 to be a very strong year for the real estate market. There's a lot of pent-up demand and a lot of people who are just waiting to see what happens with the election. So I'm setting aside some time next week to do some free market analysis of anyone's homes who are curious about the value of their home and what that may look like if you're looking to sell next spring. If you're curious and want to know, feel free to reach out to me. No obligation. I'm happy to be a resource for you. Y'all enjoy the rest of your weekend.